Did you guys get the memo that everyone that shopped at Target last quarter shopped at Walmart this quarter? Wow. One company's doing great, the other's in a recession. Target's in a recession. We'll talk about the retail earnings. CCL hits us with an offering. Shocker. The battle for 4,000 rages on. Dennis creates a tweet storm about the market, what stocks to buy, what stocks not to buy. And Craig Johnson comes out at 8:35 and sets us all straight and tells us what to do in the markets. This is pre-market prep on a Wednesday. Let's get it going.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Let's get it started here. The battle of 4,000 in the S&Ps rages on. We're down $1.75 at 97.75. That'd be 39.97.75. Spent some time higher, 40.15.75. That's your pre-market high, nothing there. 39.80.50. That's your pre-market low, nothing there. The buck is down. The buck is down 33 cents. So that's a good thing. 105.96. TLT, that's trading up fractionally. Crude rallied off the missile strike, back down 22 cents at 86.69. Gold keeps asking me to short it, but I'm not doing it. Up 650 at 17.83.20. Silver in the green by 39 cents at 21.91. Bitcoin, I got a good feeling for this Bitcoin chart. We'll talk about that in a little bit. That's down 365 at 16,335. And Ethereum is going the same way. That's down $41 at 11.97.50. We got Triple D not wearing his new shirt for Walmart, which is very disappointing. Let's bring in
you wanted to see that?
Yeah. There was a lot of wager. What was that?
Anyways, we're not going to talk about the shirt. The shirt will come back another time. If you want to go see the shirt, you got to go to my Twitter account at Triple D Trader. But let's talk about the tweet
let's bring
storm
in Money Mitch. Let's bring in Money Mitch.
Money Mitch
is lurking in the back.
Maybe you could show the tweet storm. I did not think this one was going to cause a storm. I didn't mention Bitcoin. I didn't mention GameStop. I didn't mention AMC. But somehow I caused a Twitter storm and everybody's mad at me anyway. So show the tweet that I made everybody mad for.
I got you right now. I got you right now. 2 seconds here. I got a little distracted and I was like, why do I have Twitter open
Distracted?
Again? It's because you know your pizza shirt, but
that shirt. Oh my gosh. Go to the shirt. Oh, you're looking through all my Twitter.
All right.
Anyway,
let's
so
go.
the
Right
tweet
here.
storm right there. That's the one. This is all I tweeted. It's just saying, hey.
It's hard
Tina,
to justify.
Tina's gone. Tina left the building.
18 times earnings for stocks.
Powell shot Tina.
You can get 5% risk-free. Risk-free,
yeah.
team.
Well, that's what all I'm saying. So the tweet was, and you can read it there. It's just for the people who are listening on SoundCloud. It's hard to justify paying 18 times earnings for stocks when you can get 5% risk-free. So I'm saying.
Let me read some of these
in summary.
It's going to be interesting too, because you get of course risk-free. You don't strike me as
it's not risk-free. The U.S. government's going to default, and you're not going to get paid. Well, then I don't want to own stocks.
You don't strike me as the kind of guy that's wowed by 5% taxable for 12-month return, Dennis. You don't strike me like that guy.
There's 112 comments. You can keep going through, and the Bitcoin people have somehow turned this into a Bitcoin thing. Somehow this tweet turned into Bitcoin. I don't know how, but it turned into Bitcoin. They turned the whole thing into a Bitcoin. You hate Bitcoin argument. I don't know how that tweet meant that I hate Bitcoin, but in any regard,
Dennis, two things.
There was multiple people arguing to me that the U.S. government's going to default on their debt, and you're not going to get paid that 5%, so it's not risk-free. If the U.S. government defaults on their debt, your stocks are not going to be up anymore. This was an argument of cash over stocks. If you have the U.S. government defaulting, you think your stocks are making new all-time highs? So let's think before we tweet. So all I'm arguing here, simplistic to explain to the people who can't read between the lines. Tina is dead. There is an alternative out there, and that means people are likely to pay less for stocks. Multiple compression is likely here for the foreseeable future because in the last month, we've had multiple expansion. This recent rally is not because of, earnings are exploding. The Dow's up 20% this month, folks. Caterpillar is almost at a new all-time high. Goldman Sachs is within striking distance, of an all-time high here. Yeah, it's still 10% off the all-time high, but it just came back 20. A lot of these stocks are back 20%. So if you're buying Goldman here, if you're buying Caterpillar here at basically an all-time high, you're buying Deere not far off of all-time highs, you're basically saying that this economy is going into a V bottom or going back to business as usual. This was the same argument that I gave in August, and we know what happened after that. The market imploded. This market is just overdone in a lot of stocks. Some stocks not, but a lot of stocks, look, do you see GE, Joel? Do you see the rally that General Electric has had?
I did.
Look at GE.
Yeah, I do. I know.
Those sneaky
Straight
industrials.
Straight up.
Yep. Where's that? 14 bucks?
30% straight up in a month. These are big moves, folks.
Mm-hmm.
Maybe it's time to just say, hey, this is a pretty good move. This has been a pretty good trade. Maybe it's time to ring the register because you know what? You can have a target come out. And we said this yesterday too, and we've been right about this. I said I would sell. This is what I said yesterday on the show if you rewind the tape. I would sell Target before this earnings report because one, the bar just got raised, and two, we don't know what they're going to report. And the stock is up 20% in a week. Everybody who held that gave it all back in one day. Gone. Boom. Gone. That's this market. It does a rug pull. When the rug pull happens, we don't know. But holding through earnings right now after a 20% run in your stock, because maybe it's not quite 152. People say, oh, it wasn't 20%. It's 152, and it only got to 180. That's only 18%. You're a liar, Dennis. That's what they do because they have to go get you. But
all right, Dennis.
What I'm saying is we've had a good run in a lot of stocks.
A couple things.
Go.
There's a couple things I want to say. Number one, if Elon Musk calls you to run Twitter or be part of Twitter, you consult with me first. Okay. You seem to ignite a Twitter storm there. Okay. Second of all, Dennis is not saying necessarily not to buy stocks. He's not telling you that. What he's saying is that the risk reward ratio at these levels is not nearly as favorable as they were in the past. So if you're buying Goldman Sachs at 385, 382 or 383 here, don't wait till 360 to figure out you're wrong. That's what he's saying. Maybe you want to give yourself a little bit more room if you're going in at these levels. So you can look at that a couple different ways. The other thing I wanted to say about Bitcoin, and they're going to switch the haters from you to me, but I'm looking at this chart and I am so tired. I can't have CNBC on anymore. Talking about this is what I think is going to happen with Bitcoin. I'm going to look right instead of left. I think you're going to have a consolidation here, maybe poke your head above 18, and then you're going to come down. You're going to take out the 15. You're going to go like the 13.5, and then you're going to bounce, and then you're going to consolidate, and then you're going to struggle to get over 16. And then it's going to, boom, take a notch. So I just think it's going to work its way down. I don't think that there's any, with everything that's going on. We know what happens with happens with overvalued assets. We know what happens when stocks make a turn. We know what the charts have to say. The fundamentals are absolutely horrible. How could they be any worse right now? So I know we've been, preaching the same thing for a long time. But 18,000, if I had a short-term trade on here to the long side, I'd be praying for 18,000 and not taking out the low. So we covered a lot there. Let's go to, what do we want to start? Target? Let's go to Target.
All right. So,
should have
Mitch,
sold
give us a
yesterday when we said on the pre-market prep show that we'd be locking in those gains. We were correct. Now what?
all right, we'll see what happens. It looks like looks like somebody got to target. That's for sure. It was in Walmart,
The earnings,
but
Mitch. Give us the
EPS
earnings.
at $1.54, missing the $2.13 estimate. Sales at 26.52 billion, beating the 26.38 billion estimate. Target says the company believes it's prudent to plan for a wide range of sales outcomes in the fourth quarter, centered around a low single-digit decline in comparable sales and consistent with recent trends. So no massive layoffs or benefit cuts, but they're pretty much warning for fourth quarter around a low single-digit decline in comparable sales.
Nothing was said good here. They will come in and probably buy this dip, maybe right in this area, this 152.5, Joel. They're trying to defend the low from November the 9th. It would not surprise me if they do, because the silver lining market that we're in right now, money managers scrambling around, scared that they missed the bottom, will probably come in and buy Target. So I'm not saying come in here and sell your Target when it just fell, 13% here on this print. I was saying sell your Target yesterday. So I would be, if I was short Target, I'd be covering it right now. They didn't say anything good though. I don't think it's bouncing right back, going up $26. I think it could bounce a bit from here. They didn't say anything good here.
I like the same area that you do. You have a gap 151. The close on that day was 149 and change, like 149 and a quarter. So if I was short, or not wanting to go long this stock, but if I was short, man, I'd like to see it take out the pre-market low, and I would look at that as an area to try and do some buy-in. If it holds that, if you get that green bar right off the hop and we hold here and we're back over 155, then that pre-market low is going to hold. But right now, fill the gap at 151. The close on that day was 149 and a quarter. Are they giving Walmart a haircut on this at all or not? No?
Not
Let's
much,
see
because
here.
Walmart already reported the earnings.
WMT after the big day yesterday. I know, but that was just like a crazy day in Walmart. I mean, it's be interesting to see if it can
sell
hold
your
on to
peanuts
these
while the
gains.
circus is in town there too. I mean, it hit up to 150. Everybody's really excited. It's given most of it back. The fade trade is still working, and everybody's on this momentum. Jump in, let's go. Bull market, V bottom. The fade trade has been what's working in 2022. It's been a huge move in so many stocks. I'm not talking going and shorting unities and stuff. Stocks that are down 95% are going and shorting Carvana here at this point. I mean, these things are way oversold still. So they could have more, squeezing. They could have more rally. Stock goes from 300 to 9. It could easily go back to 9 to 20. I mean, it can happen. But I'm just saying on some of these value names, and we called this value rally, but some of these value names are just way overdone. Some of these names, Caterpillar P, probably 15, 16, they're not expensive. Some of these stocks still aren't expensive, but the flight to them has just been overdone at this point in time. So I just think, what if they said something bad news? Obviously we're through earnings season, a lot of these stocks. So maybe you're safe for the next month. Maybe we do have room to 420. SPY, it's a logical point. Maybe we're going to get Santa Claus coming to town. But I'm still taking some chips off the table because I'm not certain of that. If I was certain the Santa Claus coming to town, I'd be all in long. If I was certain that there was going to be a rug pull, I'd be all in short. But I'm not, so I'm just taking some chips off the table just in case.
All right, well, let's take a look at Lowe's here coming in. Company with a Q3 adjusted EPS at $3.27, beating the $3.10 estimate. Sales at $23.48 billion, beating the $23.13 billion estimate. Lowe's raised full year 22 adjusted EPS guidance from $13.10 on the low end to $13.60 on the high end. That's where they were at. Now they're moving it towards $13.65 on the low end and $13.80 on the high end. So a little bit of a raise there. And they did see their comparable sales flat to down 1%. So that right there shows us more of that recession concern, right? Comparable sales flat to down 1%.
Yeah. But silver lining market that it is, it's like, oh, it's pretty good. Home Depot wasn't great yesterday. Home Depot was actually down on their report before Walmart bailed them out at one point in time. So the Home Depot did beat, but I think Lowe's has had a big run too. I don't know. This is just not the kind of stock I want to buy right now. It's like, oh yeah, it's so cheap. Well, is it really? Is it? I don't really see it. I see a stock that's run from 180 to 212 in about 10
lower.
days. I just think like the easy money's been made on the long side here. I know, and people don't like to hear bearishness. They want to hear V bottom. A lot of people are buried in their long-term portfolios. They want to hear, I'm going to have all my money back in 6 months. It's going to be okay. I know I'm down right now, but in 6 months, all my stocks are coming back. My Carvana will be back at 100. My Peloton will be back at 50. My Lowe's will be making new all-time highs. I'd love that to happen too for everyone. It's it's better trading environment when people are involved in the markets. I just don't think it's reality. I keep trying to give you guys a reality check that I don't think we're in this 6-month bear market. It's just different this time. We can look at all the stats, go to Ryan Dietrich, read about all the stats on how the average bear market's 18 months. And, if you hold for 18 months, you get your money back. In a lot of cases, that's not true because in individual stocks, they don't always come back. In the market, it has been true for periods of time, but we've had some long bear markets as well. NASDAQ took 15 years to get its losses back from the 2000 to the 2000 tech bubble burst in 2002 until we finally got up to new highs in about 2013 or 2014. So maybe it was 10 to 12 years. Play crazy prices for stocks, so stocks are not coming back.
I like the
technicals. Lowe's is a good company.
Yeah, I've owned this, I think, since 2014. So I don't even know where that cost basis is. But I like the setup here because you had 3 highs in the same area. So I'm just going to say you hold 211, and this has room to the upside. There's only one other daily high that you were, 1584. But if this market starts to roll over, this thing doesn't hold 211. Look for the close. So that's 3 highs. Someone was out there selling the last 3 days. Now they're getting a premium to where they were selling before. Let's see if they ring the register. But important to keep an eye on 211 for LOW.
Advanced Auto Parts. Let's go towards the auto sector here. EPS at $2.84, missing the $3.34 estimate. Sales at $2.64 billion, beating the $2.64 billion estimate. Seems like they beat that by a slight amount there. They did lower full year 22 adjusted EPS.
I'm just going to go quick on this one. One number only. The low of the move, 154.46. Felt you missed the low of the move or you want to cover short? There it is for you. Dennis?
Right there, that's your number 2, 154. So I think it could balance there. I think you have money managers that are underinvested. I'm sorry, I'm stuffy. It's 2 months of COVID. It's awesome. 154, the nasal congestion's crazy. 154, I think you're right. That's the number. It could bounce there. Buy the dippers are lurking. They're still lurking. We haven't broke them yet. So I think this is, it's not an area I would sell.
All right, let's keep it going. We'll go to TJX here. Q3 EPS at 91 cents, adjusted EPS at 86 cents, beating the 80-cent estimate. Sales at $12.17 billion, missing the $12.3 billion estimate.
I'll go first. I mean, it hit 76 yesterday. That really hasn't hit that area now. That's resistance. I don't know if there's any paper in the New York book there, but up above 76, some room on the upside to the all-time high. It's 77.35. You have to check to see what the all-time closing high, but not a great report. Let's see if it can take out 76.
They lowered guidance here. So that's something to consider.
Wow.
This market, again, is in the silver lining market where sometimes they hammer you on the lowered guidance and sometimes they're like, well, you're a discount retailer, though. So you do well in a recession, we'll buy your dip. So the dip was bought immediately on 72 and lowered a lot. I don't know which way this one's going to go. Hard one to call.
You like maybe Ross stores a little better.
What'd they say?
No, I'm not just saying like they're.
Oh, you're just bringing it up. I was like, I didn't even know Ross stores reported.
No, just relationship.
They're the same store. TJX and Ross, same thing. TJX, Ross. There's Wow, there's a pile of
TJX has been a
retailers
lot
there,
better
but TJX and
performer
Ross,
than,
I pair those up together. Those are good. Those are two stocks that track each other fairly close. Burlington Coat Factory's in there, BRL. I don't know when they report. I think they're coming. I haven't heard from Ross or Burlington, so they're probably coming. TJX reported today. We just did the earnings.
98.40 is a pair of highs in Ross stores if you're trading that one. 98.47 was your high on Monday, or excuse me, Friday, and then 98.37 today. So that's resistance. Trap door here is 94.50. You got about a $3.5 slide down to 91.08. If you get some bad news on, I mean, all these places are the same to me. I mean, they might offer different stuff and different prices, but I mean, you could probably put me in like any one of these like big box, retailers, and I couldn't, well, Target has more food. I know Target has a lot of food, and I won't be able to tell the difference between them. But I guess when you shop online, it's not as easy to see what the stores look like.
Ross has earnings Thursday after the bell, so
Thursday. Okay.
Yeah, so we're not too.
They
far
want to
from
cover
Nvidia.
I want to cover Nvidia too, Mitch. I think Nvidia is very important. Reports here tonight.
What a run!
Let's talk Nvidia. It's been an incredible run. Let's give this perspective. Lay the tape. In 1 month, Nvidia has went from 108 to 166. It's basically up 45% in a month. It is going to report earnings tonight. It is Target replay, not saying it's going to do what Target did, but saying I don't want to take the risk. If I had this on for a trade, I would not take the risk of carrying it through a report. I think you're actually seeing that with Nvidia weaker here today. Probably a few people looking at Target and saying, I don't want to give up the last month of earnings. I'm just going to lock it in right now. So I wouldn't be surprised if you have some weakness here ahead of the report as money managers maybe lock it in. It's been a good run. I don't know what they're going to say. The chips actually kind of bottomed already. Maybe they're going to say something okay. I don't think it's going to pull a Target and give it all back, but I don't want to take the risk either. So I think I'd lock it in if I was long it. That's just my opinion.
Man, it's come a long ways off that bottom, but when I pull up the upper right chart, that looks like, oh my God, look at that rally. I mean, holy mackerel, you got to ring the register here. And then I look at the bottom right chart, and I'm like, this puppy could just be getting going, right? I mean, 346.47. Who knows if we'll see that level again? I definitely would be trimming ahead of the report. 170 looks like you got that was the high from yesterday. I don't think you're going to get that today. Even if the spoos rip, just because of people. Why if you did an intermediate trade for earnings, Dennis? You talk about the pre-earnings run trade, and I know it's been something we've taught in our seminars. I know this has been a little bit different of environment, but if you've been playing this 3-4 days ahead of the report, even if you're stuck in, you're killing it. Why take the risk to the report? I mean, maybe they'll get a beat and you'll get a pop. If you are taking it to the report and you are long, then layer your offers out there. Like if someone wants to lift you at 175, let them lift you at 175. If they want to lift you at 180, give them a lot more shares at 180 if they want to do that, because it's just
180 looks big. I'd give them everything at 180.
Yeah. Maybe start at 79 and a quarter, 79 and a half, and then the big lot at 79.99. That's if you want to exit. I wouldn't say, shorting that, but I mean, this thing was at 108, right? Was that the low of the move? 108.13. So we'll see what happens. Anything can happen off that report.
Expected move, just adding up the calls and the puts. So you had $7, $7.10, $6.50. So what is that? $13.60, somewhere in there. About $13.60 is the expected move, which is about a 9% move. So $13.60, bring it right up to that 180. So if we're doing our CC analysis here after the report, that 180, which has those little double top, is a nice area to get the hell out. And obviously knocking 13 points off, this would bring you to about 153. So if you're thinking it's going to move around the expected moves, that would be your bands. I'd say around 153 on the upper band, 180. So I like that 180 sale. So I think like 179, if this reports and it's like the algos get silly on the headline number, laying it out at 179 might not be a bad idea.
All right, team. We got to pay attention here. It's 8:25. We're about to get some 8:30 numbers. Retail sales will be coming in. Core retail
Big numbers
sales
every
also.
day.
So
We don't get
just
away
pay
from these
attention.
big numbers.
Yeah, pay attention. This definitely could shake up, especially like the retail stocks, right? So pay attention to those kind of stocks. I know Best Buy was getting hit earlier today. TJX, reported. Stocks like that could definitely be moving on this. We'll just have to wait and see what the report comes out. Estimates are for retail sales month over month. Estimate is a 1. Core retail sales month over month is going to be more of 1 that we're going to pay attention to. Estimate at 0.4, prior 0.1. And there's also a lot of numbers coming out today at 10 a.m. So pay attention to those later today. You got the NAHB housing market index. You got crude oil inventories. You got crushing crude oil inventories and industrial production also set to be released. So there's a lot on the economic table. And like always, what are these reports going to always kind of show us? Well, to show us, do we have a strong environment, right? Are we growing, contracting? Those are the kind of things you want to be sticking with right now, because I feel like, the bulls keep giving a little bit of ammo. We got some ammo yesterday with the PPI. And then, of course, all the Russia news just completely took that off the table. But I still think, we're getting some bullish news in at least statistics. And that itself could be some ammo for this to be back into the bull camp. So I'll throw it to you guys. I wanted to ask the question, are you guys back in the bull camp, even after yesterday's, of course, missile situation with Poland?
For me, I'm in I've been in it. I'm going to stay there. I mean, we're at an inflection point. We're at a very big point here. We've consolidated. I'll pull up the S&Ps here. To me, it's a battle of 4,000. We've had a big run up. I know I have that other line up there at 41.73. That was the high on the September CPI day. If this market, and I'm not just talking about closing over 4,000, I'm talking about making highs at 4,030, 4,040, and then building a base at 4,000. Right now, you have a double close at the high of the move right at 4,000. It's a battle there. So that's going to make me bullish or bearish, is if we can make a big stand at 4,000. And right now we're waffling. You can't say. We've had a couple days of tight ranges. The lows are in the same area. Couldn't hold the gains yesterday. I mean, Dennis, I know you lightened up some yesterday. There was definitely we're at a point where I think that some investors and traders are just more like they're sitting on some big profits. And you get a 50, 60 point jump in the S&P off a PPI number, off one PPI number. They were out there selling. And we were going down even before you had that missile strike. The market was in a selling mode from the open yesterday. And then you had the news that accelerated it. So that's my stance. And Dennis, you could give yours.
I'm still short term. I look at the top right chart, Joel, the one you're looking at there. It looks like a flag. It looks like we're consolidating and go higher. So as much as I've been saying I'd lighten up, I mean, when you look at that chart, I can see the room to 420. I'd sell. I'm like, if we go to 420, I'm gonna be loading. I'm gonna unload. I'll be 60% cash if we go to 420. But I'm starting to unload because I don't know what's going to, just happen, and I don't know we're gonna go there. All I know is when we were down at the lows, I bought a few stocks. I'm selling those stocks. I sold my AMD. I bought down there. I bought Bank of Nova Scotia. I haven't sold that yet, but I bought 6 or 7 stocks down there.
You're not selling.
I bought stocks earlier too. Don't kid yourself. I'm bag holding too. Like I said, the Unity, and I ended up turning around and selling the Unity. So I don't know. I'm just at a point where I'm reading the register on some stuff, but I haven't read the register on it all, because I do see that I do see that we could go to 420. I do see some room to the upside, but some of these rallies in some of these stocks, like Caterpillar and stuff, it just feels like it's getting long in the tooth. Oh,
hey Dennis, go wide here. 8:30. They don't like it. Bad retail. Oh, sorry. Did you get picked off? Retail sales.
Bang, bang, bang. Bot.
Bye. Retail sales are not good. Mitch, give us
retail sales at 1.3% versus that 1.0% estimate there. That's for the month over month. There you guys see it. They're not liking it. That's for sure. Here you guys, I'll put it up as a banner here so you guys can get it. U.S. retail sales month over month here, 1.3% versus 1% estimate here. Let me look at some other numbers as they come in. Also, see what's also maybe shaking.
All right.
things
I'll
up.
just give you the skinny here. We didn't breach the pre-market low. Pre-market low comes down at 39.8050. We just got within a hair of that. We got to 39.82.75. So what the bulls have to do here is they just need to maintain that pre-market low. If you take out the pre-market low, that low from yesterday was, man, oh man, oh man, at 39.61, that'd be a nice target on the downside. I like the comment, hot, and there it is. Retail sales 1.3 versus 1.2. You got any more details?
Yeah, there's the core retail sales that was at 1.3 versus the 0.4 estimate there. Of course, that one excludes spending on automobiles, gasoline, building materials, and food services. So not looking too bad there. And at least expanding, right? Not contracting. What we don't want to see here is some negatives. So that's not a bad area there, but we still see that little pullback there in the market. And I'm looking around to see what other could be hitting this on the downside. But there's the export price index. I think that's what's affecting us a little bit there. Still more contraction there. A little bit better than the estimate, negative 0.3 versus negative 0.4.
Right back up. Back up.
And there you guys see it. That's why I was a little confused from the numbers. There's a lot of times I'll try to be as straight with you guys, is that it felt to me like that at least the retail number wasn't bad. Maybe you're looking at this export number that got a hit on the downside there, but that's how these algos have been lately. And it feels like there's a lot of these kind of wicks or tricks. You got orders out there, and it's dangerous because next thing you know, you're getting filled, and then it's opposite action that actually happens. We've been seeing this a lot.
All those things you just got hit on. Nice pop back. Yeah.
Sometimes you get lucky. I'm like,
okay.
This sucks. Oh, wait a second. It doesn't suck.
Now, Dennis just revealed his most deep secret strategy. Just leaving those orders out there.
Get picked off by the dumb algos. It works sometimes.
Yeah, the dumb algos jumping in there. And that's just how it goes, right? And I feel like the algos have been lately, it seems like we get these quick reactions in opposite direction, and then it doesn't just follow through. So the algo is definitely jumping the tape. That we've definitely seen in the last month.
Now that the algos are jumping. Yep.
Look at that. You're getting a bounce here. You got the double close area at 4,000. I'm still going to stick with that mantra there. It's important for the market to clear this area, not only clear it, but show a bid here. Dennis, alluded to what you alluded to earlier. There are money managers out there for dips, or anybody that had shorts on, use that opportunity. But this is really,
this market is full on by the dip. This market is full on by the dip mode. We're V-bottoming. Like, that's what the market is saying. The market is trying to tell us that, yeah, it's all going to be okay. It has fooled us before, though. I don't want to get fooled this time, but and here we're choppy. I mean,
could it just be saying though Q4 Santa Claus rally? Could that be what it's saying here versus that it's a V bottom, just Santa Claus rally, Q4 rally?
We can get a Santa Claus rally. Maybe we're due for a Santa Claus rally. I mean, we set up okay. We set up to 420, not bad. The buy the dip mentality is there, which makes me not shorting stocks here. If we were at 420 right now, I wouldn't be just selling stocks. I'd be shorting stocks. But I'm at this point in time, I could see the arguments for the bulls. I could see the argument for the bears. I'm still trading market neutral, but I'm lightening up the portfolio just in case there's another rug pull. Just playing it safe.
All right, we're going to go a minute early here, and you guys don't pay to listen to what we have. Well, you guys don't pay at all, but you guys like you guys like our guest. And I will say, going back over the last couple of years, there's been one guest that's pretty spot on to the market. Talked Dennis and I off the cliff during the COVID. Talked about 3,500. I'm going to have to go out to Minnesota and figure out how he did that as the low of the move has been 3,500. But this is Craig Johnson. He's the managing director at Piper Sandler, chief head of the technical research group. Let's bring Craig on, and we can get our ears ready. Craig, how you doing today?
Good morning. Can you guys hear me?
How was that for an intro?
That's an
How was
amazing
that for an intro?
That was absolutely terrific. Can you guys hear me okay?
Yeah, we got you.
Yeah,
we
we're
got you,
good.
Craig.
We're good.
Right.
We got you. So I want to throw in here, and I don't know if and someone's confirming this, that you've revised your S&P to the year to 3,900. Is that correct? Because we're trading close to 4,000.
That is correct. So I was originally at, I started out, I'll rewind all the way to the beginning to about a year ago. I started out thinking that we were going to be, 51.50. I lowered that in about May to about 47.25 time frame. And then about a month or so ago, I lowered that down to 3,900 just because we're really running out of time. You guys were talking about before I came on, do we get a Santa Claus rally, run into year end? But to see a move to 47.75 by year end, we were just purely running out of time. So I just kind of marked at the market in thinking about what is realistic. And at this point in time, as I look at this market today, there's a couple big trends and themes that I see sort of playing out in here that we need to talk about. Number one, we got to talk about the downtrend resistance line on the S&P 500. Coming off of the January highs and the fact that we're coming right back to that 200-day moving average. As a good friend of mine, Sam Stovall, would tell me, this is like a rusty door. It's going to take a couple pushes before we ultimately break through this. But I would tell you that I'm quite optimistic that when I look at things like the Dow at this point in time, we've already reversed this downtrend. We've already moved back above the 200-day moving average. And if your listeners haven't seen this yet, we literally right now have a growing number of individual S&P ETFs that have already closed back above their 200-day moving averages, and in some cases reverse downtrends. I mean, if you look at the XLI, you look at XLB, you look at XLE, even XLP has done it just briefly, and you're continuing to see a lot of these ETFs now breaking back above it. In fact, you've got 6 out of the 11 ETFs sector ETFs that have already broken back above their 200-day moving average. Guys, I got to tell you, that's bullish, not bearish.
Craig, what about stocks like Caterpillar? And I know I don't want to pick on, you don't have to pick on specific stocks, but I'm just going to give you some examples. Goldman Sachs. I mean, there are a lot of stocks that are approaching their all-time highs. Are we in this environment where Caterpillar is just, your earnings is going to just grow now going forward here? Or is this recent rally just multiple expansion again on value stocks?
Well, Nancy Lazar, who works on our economics team, she's got a very solid theme of reshoring or onshoring. And I think that we're going to see these industrials probably do better than I think a lot of people are expecting, because we're going to be bringing a lot of this manufacturing that had been pushed out to the APAC region coming back home. And there's going to be a need for a lot of factories to get built. Think about Flextronic, think about those kind of companies that are going to actually do the manufacturing of all these electronic goods. And I think you're going to see companies like Caterpillar and a lot of these industrial names be at the forefront of this. And I love her phrase. She says that the Midwest is kind of the new sort of emerging growth market at this point in time, because that's where a lot of the jobs are. That's where a lot of this manufacturing is going to take place. So your question on Caterpillar, it's breaking out the new highs, and I think that's a sign of this reshoring trend really starting to take hold.
All right,
everybody's on mute here. Everybody's on mute. The uncomfortable silence. I'll come in there. Mitch had a question, but he was trying and he was on mute there. So, Money Mitch, what were you going to ask?
All right, Craig. Now, of course, like Dennis is bringing up here, some value names and some growth names. Of course, what I feel like we're more along seeing is just we haven't really gotten negative catalyst now that we're getting the CPI to come in light. I feel like the bulls really truly have a little bit of ammo to really start pushing that the Fed can start changing their thinking. I feel like before that CPI report, there was only talk, and now there was actually statistical advantage that they have a little bit of ammo to say that, yes, we are seeing inflation truly coming down and the pace of interest rates is slowing down. Is this could be why we're seeing the rally? Are people just trying to front run this action?
Yeah, I guess I'd put it into a phrase and saying before for the market, it was like we're trying to drop it like it's hot. And now we got the opposite happening, right? Not so hot is actually good for the market. And I think at this point in time, we're entering this period where we're starting to see this inflationary narrative, peak narrative coming into play. And we are seeing not only from the CPI last week, but the PPI yesterday, that things are slowing. Now, we have not really seen a huge slowdown in the economy quite yet. Consumers are still spending, whether that's coming from savings or whether that's coming from credit cards, like some people are discussing at this point in time. The economy is still doing well. And we really haven't seen the full impact of all these Fed rate hikes having a major impact upon the economy and consumers quite yet. I think that's still yet to come. But for now, the narrative of peak inflation can probably carry this market higher from here to year end. And I think that's probably a trade that can pick up steam on any sort of reversal of that downtrend off of those January highs and even a close above the 200-day moving average on the S&P 500.
Then why are you sticking with the 3,900 target?
Because we got like 30 and change trading days left in the year. And if I'm going to go change a target for 30 trading days, institutionally, that just seems kind of like silliness.
Okay.
So when we put out our December publication, which will be in the next few weeks, we'll then establish a new price objective for 2023. But to change it for a couple weeks kind of doesn't seem like it makes a lot of sense to me.
I think Joel's going to ask, why didn't you go like 4,200 or 4,300? Because 3,900 means like you're actually bearish, are you not? Like it means you're thinking it's going to go down from here.
Well, keep in mind when I made that change a month or so ago.
3,700.
Right?
Okay, you were at 3,700 when you made it.
Yeah,
Okay.
I mean, people were looking at me like, you really think we're going to go up like high single digits between now and year end? And it's like everybody thought the world was coming to an end. And I went back and I looked at the charts and I looked at everything and I said, 3,900 from here to year end seems pretty good. And since then, the new evidence that's coming to the market technically at this point in time is really the broadening out of the breadth of this market. I mean, it's no longer just about the FANG stocks at this point in time. We're starting to see industrials working. We're starting to see the financial stocks picking up. Healthcare is picking up. There's a lot of stocks. And again, as I said earlier, I got 6 out of the 11 sectors for the S&P, spiders that have already closed back above a 200-day moving average. The evidence of this market to go higher is building. And any sort of close above, again, the downtrend resistance line, if I had to sort of kind of set an objective out there unofficially, you got to go look at maybe 43.25 as sort of a level that you could get to on any sort of Santa Claus rally. Now, that's not an official price target. That's just the next big resistance level once you reverse that downtrend.
Do you think your year-end target for 23 is going to be higher or lower than the current level? You could pass on that one too if you want.
No, I honestly have not sat down and worked my methodology yet that I've used for the last 10 to 15 years. It's a price-based model, and I haven't not done the work yet, so I really can't give you a target.
Okay.
Yet.
One follow-up, and then I'll.
But it's a reason for you to have me back on the show, though, right?
Oh, then we love having you on the show. So, I've been talking offline with your colleague Gene Munster, and he is still earnings are still kind of slated to go up slightly for 2023, right? Correctly, even in this environment. But he's more concerned about like the second half of 23. And that's when, like, everyone's looking for an imminent recession, right? That's going to happen now. He has more concerns for 2023, and that's when you're going to start to see the serious adjustment in the estimates. And we're also already trading at a really high PE. I just wanted to see what the recession, non-recession talk for 2000, because it's not going to happen in 2022 unless you go by the barometers of two negative GDPs in a row. What's your outlook?
So let's put it together in this way, right? So if we look at the S&P 500, just looking at consensus, and then I'll tell you where our eco team is at this point in time. But if I look at the consensus numbers for 2023, over the last 90 days, they have declined 4.16%. Over the last 30 days, they've declined just about 3%. And if I look at the overall growth rate, and right now for 2023, it's around 6.5% growth, 23 over 2022. And if you put that into a multiple basis, you're literally talking about a 17 multiple, or 16.9 to be precise, for 2023 at this point in time. Now, yeah, the numbers are declining, and Nancy and also Michael Kantrowitz from our economics team and fundamental strategy team, they think those earnings numbers are going to decline meaningfully. They've got numbers around $190 for next for 2023. And to put that to where the street is at this point in time, you're still talking about $236 in earnings. So they're still looking for, at this point in time, about a 20% decline in those earnings numbers. Now, that being said, that sounds terrible. I understand Gene's concerns for what 2023 looks like. But for any of us that's looked at the market for a long time, and Gene certainly has, because Gene and I went to high school together, believe it or not.
No way.
Oh, yeah, absolutely. I still got fond memories of Gene strolling through the Edina High School hallways, He was the man then, and he's even more of a stud now. So we love Gene. But I guess what I would say in terms of the market itself, coming back to this, if we're going to see the earnings numbers come down to this degree, then I would expect to see the multiple to probably expand, right? Because when you think about what historically happens, when earnings sort of hit a peak, you tend to see multiples contract, and vice versa in cyclical type environments. And I think that's what we'll probably see again. Even though the earnings may come down, you may not see the multiple actually contract or stay flat where it's at. It may actually go up, because people are always looking ahead and trying to discount peak and trough earnings estimates.
Yeah. All right. Now, one area definitely I'm trying to figure out what is the best sector, right? So I'll just bring up a chart here that I have. You got the XLV on the top: healthcare, technology, energy, and then financials. Which area would you like towards the end of the year?
Well, I think from here to year end, you're going to see, continued performance in the XLE. I think you're going to see that continue to be a move. The earnings numbers are going to be very, I think, good. We're also going to be moving into winter. Clearly, when I look outside right now, winter has arrived, given the fact that it's now snowed in Minneapolis for about 3 days in a row. And, no more mowing the yard. So my wife is probably happy there's more time on the weekends. But I would say the XLE probably does well. I would also add to your chart there, though, the XLI.
All right.
Another one that I would add into this. The industrials are working. And I think from a trading perspective, Republicans win, Democrats win. Either way, there's going to be more spending on military, period. And that's where, when you look at a Lockheed Martin or a Northrop Grumman or General Dynamics or some of these, or Raytheon or some of these companies, a lot of those charts still look very strong and still look very constructive on an absolute and a relative basis. And those would be areas that I think traders could focus on that are outside of the continually declining FANG stocks. I mean, if you pull up a chart of Alphabet, or you pull up a chart of Microsoft, or even Apple to a degree, they've sort of lost their luster to a degree. And from my perspective, I'm starting to think about talking about this market, interesting way to phrase it, but how do we think about this market X tech? And the last time that I talked about this market X tech was coming off of the bubble, the tech bubble in the 2000 period of time. Because when you got down into 2002, 3, 4, everybody was saying tech is never coming back. And for a long time, it was other parts of the market that were working. And what drove a lot of that was just money coming out of a highly concentrated handful of stocks. Sound very familiar to where we are now. And I think that's, again, happening. And I was reminded last night by our new associate on our team, Scott, that we're still about 20% of the market is still is still the FANG stocks at this point in time. When you think about the S&P 500, that's huge. There's more money to come out of some of those names, and that's going to then broaden out this market.
Speaking of tech, Jay's asking, what do you think about all the layoffs at these tech companies? Amazon, Twitter, Meta, you see that coming out of them now. One thing that really can point to a recession would be, a rising unemployment rate. What's your take on the tech layoffs?
I guess what were they doing before? I mean, we're laying off that many people, and it doesn't seem like they had tasks or roles that were particularly all that meaningful. I suspect that back then they were trying to. They had all these people employed. Not sure what their roles ultimately were, but given the profit margins and stuff, this was certainly a way for them to not show as high of a margins as they had before. And now that they're finally seeing some pressure to their overall business lines and they want to maintain those margins, I'm not surprised you're getting some of those layoffs. But there's a lot of opportunities for these people to get jobs. The job market still looks fairly strong. There's a lot of service openings. I don't know about you, but everywhere I run around Minneapolis or some of my most recent marketing trips, there's help wanted signs everywhere. I think these people will be easily absorbed into the economy. And I think this is going to sort of answer a question of, where are we going to get the people to work these manufacturing jobs? Where are we going to get these people to ultimately work some of the service jobs? Perhaps they're going to come out of some of these tech companies that have perhaps overhired.
One thing about this argument about obviously going from some of these social media companies like Meta to manufacturing jobs is the salary cuts they're going to have to take. Because I have a friend that just got laid off from Meta. Do you know what their salary was, Craig? Advertising department. Guess how much they're making? It's Canadian.
Well, if they were probably located on the East Coast or West Coast, where
in Canada, so Toronto.
Toronto.
They were probably $275,000 a year.
Yep.
$275,000 a year. There's no manufacturing job paying $275,000 a year. So there is going to be a little bit of pain for some of these layoffs. Obviously, there's not a lot of people making $275,000. But all I'm trying to say is some of these social media company layoffs are serious layoffs where these people were really living the high life. And some of these salaries the lifestyles that they were used to living are going to have to significantly change, because I don't think they're going to just go find another $270,000 job.
No, they're not. But if you also think about perhaps the value add in some of the roles that they had previously, the value add was probably bloated. It was probably higher than the value add wasn't there for the comp package.
No, for sure. The TikTok video. Did you see the TikTok video, Craig, of the girls, her day at Meta? I don't know if you saw that. It was going around about 3 weeks ago. It's kind of when the layoffs started. Posted and I think it was real. Posted the day at Meta, and it starts with it's like a 2-minute video, and it starts, I get there and I have I go to Starbucks, then I go to the gym for an hour, and then I have a meeting, and then I go for a 2-hour lunch, and then I go this, and I'm like, you think this person's making $200,000 a year? This is the person that is getting slapped. So there is actually an argument to be made that if they cut that meat out of there, maybe a stock like Meta, which is already a value stock, could even make more money.
I wouldn't call it meat that you're cutting out. I would call that fat.
Fat. Sorry, fat. Yeah.
One more, Craig, before I let you go. Bitcoin.
Sure. I mean, let's talk about FTX, right? Because I was anticipating that you were going to ask me this question, because my hobbies that I've got in terms of crypto mining and heating my house and doing those kind of things. I look at what happened with FTX, and it's a shame. Number one, it's going to sort of shake the confidence of the 20 to 40-year-olds that have been involved in the cryptocurrency space over time. The other thing is it's going to bring in rules, regulations from the government. Arguably, they should have already been there at this point in time, given the size of the market. But to think that Sam, Bankman-Friedman, was able to create the size of losses that he has created, and also to use customer funds the way that he used customer funds is absolutely egregious. And there's going to be some investigation. I'm sure there's going to be some great movies that are going to come out of this. But at the end of the day, this to me is sort of a watershed event for the crypto space. And when you think about the peak, the trough, and the sort of cycles that have gone through crypto, this isn't the first exchange failure that's taken place. And I think investors need to keep that in mind. And if you're going to play in crypto, consider keeping your own keys in your own wallet. That's one way to do it. Or play with an exchange like Coinbase or others that have been around. They have no leverage, and they are very well, capitalized. These are all things we got to take into consideration. But in terms of crypto, I haven't lost faith in the crypto side of things. I'm not a Bitcoin buyer. I'm more of a Litecoin buyer, Algorand buyer, and some of those. But I do think that the crypto space is not going away, but we are going to get more regulation. And then we're going to see more of the hedge fund folks that have wanted to trade in this space start to trade in here. Citadel is a great example that will probably be doing more in this space as the rules and regulations. I mean, Ken Griffith has always said that they'll trade anything as long as they know the rules of the road. And those rules are going to get laid out here, I think, pretty quickly.
I think the hedge funds are in there, and I think they're in there short. But anyways, Craig Sandler, he's a managing director and chief market technician at Piper Sandler. Thank you so much for joining us. Great information. We'll be getting you on early in 2023. Thanks, Craig.
Thanks, Craig.
CCL, we haven't done that yet. The old
right.
dilution trick. Let's do CCL.
All right, Carnival announcing a private offering of $1 billion of convertible senior notes due in 2027. The company plans to use the offering as a part of its 2024 refinancing plans.
Here's the problem again, what we said yesterday. Yesterday on this show, we were talking about some of these, junk stocks, some of these companies that are burning cash rallying. When they have significant rallies, the companies use those opportunities to raise capital. And here, you're thinking, yeah, CCL, $6 to $11. We're going back to 20 or 30. Here's the problem, is that these companies are still not doing that well. They're still burning cash. There's a pile of debt there. And they use the opportunity of the stock price going up to raise more capital. So this isn't just a DNA did the same thing yesterday. So you're going to start to see as stock prices rally, that some of these ones that are beaten down, we're not talking the Caterpillars, they don't need to raise cash, but the beaten down, darlings of 2020, 2021 that are burning cash, they raise cash on the rallies. So you get the stock offering shoved down your throat. So, I mean, CCL was looking good yesterday. Well, boom, there's a nice 13% fall, giving back a significant portion of the rally. So it's tough. It's tough to, I still struggle, and I know Craig, came on and said a lot of good things and making some good points, even like Caterpillar, fantastic point. But I still struggle to just think we're V-bottoming and everything's going back to business as usual next year. I struggle to find that path when I'm logically thinking about it.
When I think about CCL, and I think about, they did some financing a long time ago at some pretty good levels. And now they're refinancing. They're not going to be getting the same kind of rates that they did before. So but obviously hit 11.50. I even took my eye off this. I hope a couple people in the pre-market prep plus chat had this. I hope they rang the register. 960 all the way back down here at 960. See if you can catch.
I think we just lost Joel. And anyhow, I'm shorting Comcast. Just joking, but he's been struggling with that internet. So Joel was telling me about it yesterday. They're doing a whole bunch of upgrades on the road. Comcast and his internet's been up and down ever since. So I mean, so anyways, it appears like we lost Joel mid sentence there. He looks cute though. It's a good freeze, on the picture. So
it's not too bad. It's not the worst freeze there. There's been worse before. I'll take his chart down and take him down. I'm sure he'll be back in a second.
He was just gonna get to the meat, but I'll try to get the meat for him, or the fat, whatever you want to call it there, Craig, with a good point there too. We're really choppy here today. I don't know if this market knows what it wants to do at this point in time. We've had a good run. We're at the crossroads. Are we consolidating to go higher? It's possible. Seasonality sets up actually well. I mean, we're coming out of earnings season, so we're not likely to get a lot of tape bombs happening here. I mean, the target is a tape bomb for sure, but we knew that was coming. NVIDIA is going to be a big print tonight. But we get past this week, you got some retailers reporting about we're getting towards the end of earnings season. So we got through it, and the market actually rallied through it, and that's a good thing. So I wouldn't be surprised if you got room to 420 on the S&P. As much as I've talked bearish overall and taking chips off the table, it's hard to be full-on bear here when the market keeps finding silver lining. But I'm not jumping in and loading up my long-term portfolio and saying, yeah, back to all-time highs next year. I think it's going to be rough roads ahead, but I do see the potential for another 5 to 6% higher from here.
Yeah, my biggest concern here is I'm also keeping on watch what's going on in Bitcoin. It seems like yesterday in the middle of the day when we got the news of BlockFi, we started getting hit. And then 20 minutes later, we got the Poland news, which didn't make things better. I was live as this was happening, so that's how I know that it's like that close in timing. And I could see the price action. As soon as the Bitcoin thing started coming into play, boom. And I started looking at Bitcoin. Is it Bitcoin, right? Because I was going to see if Bitcoin was dropping fast. And then you saw it. Bitcoin starts dropping fast. Then I get the Poland news and I'm like, okay, yeah, this is too much negative now. The market can't hold this. And it started coming down fast. But as you can see, we're right back to the wall of worrying. We're climbing right back. And I think that this shows me a little bit more that the market wants to go up. But Bitcoin concerns, uncertainties, course, risk asset are causing some concerns in the market. And I think that overall, the actual market itself, stocks, if we're just talking equities, seems like the path of least resistance still to the upside right here. But of course, if Bitcoin gets dragged down, well, we can't just keep ripping, right? And so I'm keeping a close eye on what's going on in Bitcoin today. I'm keeping a close eye on what's going on in the Russian situation. If we get any news that's not what we got this morning. This morning, we did get a report from Poland's president saying that it was a Ukrainian air defense missile, and there's no evidence to suggest that the incident was an intentional attack by Russia. So unless that change, I'm going to stay in the green light, guys. So
that's good news. I mean, obviously,
we'll see what else is going on
killed,
out there, but definitely it's tough. It's tough there. And I think yesterday when I heard that Russian news, I kept asking myself, what are some catalysts that could bring us down? Well, of course, heightened tensions in the war would definitely bring us down. If, Poland got attacked by Russia, well, I would be taking everything off the table for the fourth quarter rally. Now we got confirmation that that isn't what happened yesterday. So I'm still in the bull camp. Now, the only thing that can really kind of change me here is if Bitcoin just keeps coming down because of the kind of exposures that keep coming out to FTX. And we could still hear more exposure, right? Like, I know that Joel kind of mentioned it tongue in cheek, but really, he's really kind of concerned about hedge funds having some exposure also to FTX and what could come out after that. So we'll see what happens here. Right now, bullish camp, Q4 maybe a rally here, but of course, we need to continue to watch, and oil markets are going to be definitely volatile today. So keep your eyes on that as we get a lot of numbers at 10 a.m. What will you be watching?
Okay. I think you hit the nail on the head. We set up okay here in the year end in the Santa Claus rally. We're through earnings season. Not a lot of tape bombs to come. Bitcoin's a wild card. Obviously, the Ukraine-Russia situation is always a wild card as well, as we saw yesterday. But for the most part, I can see a path where the market can silver line this thing to 420. After that, it gets really tough. And I'm telling you, if we get to 420, I'll have a lot more cash in my long-term portfolio. So lightening up a bit here. Going to continue to lighten up as we have rallies. At 420, I'm like, it's yours, man.
Yeah, I mean, we're still extended away from the 9. I never like when we get too extended. It's hard to stay extended away. We get a little bit too extended. But the 200 moving average has also been a good topping area for the market lately. So that's that purple line that you see here. It ran into it in August, then quickly turned around. That's around 406. So
what is that line?
That's 406.38, and that's the purple line.
No, what's
the
line? You didn't hear
200-day SMA.
That's the 200-day.
200-day, and a lot of people have the 200-day. It's
not
like it's just a few.
Got to respect it.
And definitely that can be an area where I could see it running to 406.38. So that's the first kind of area that I see it running into. And then there's this high that we run into on the September 12th, which is a high of 411.73. Somewhere in that area I see us running into. But of course, that's not much higher. And I think that's what Dennis also brings up, because we're talking about what, 2% more in the SPY, maybe 3-4% more. Is that enough to really be chasing this rally? That's where I would be a little bit careful. And that's where I think Dennis also draws the line a little bit about being a little bit risk adverse here, because as we go higher, we still leave more room for that quick whoosh right back down.
This is it. I mean, when we were sitting on the lows a month ago, it's like a lot of bad news is priced in. Well, story is gone. The bad news is not really on a lot of these stocks priced in now at all, as you saw with Target today. So the theory and the theme that all the bad news is priced in is gone because we've had a significant rally. So I've got to look here and start reanalyzing again. And where do we go from here? If you're buying the targets, well, obviously Target's a different story today, but yesterday at 180, or if you're buying, all the other cyclical names that have sitting energy as at all-time highs, you're saying that, this recession is not going to happen, and this market is going to be bottom, and we're going to go back to business as usual, as like 2020 again. I don't think that's the case. That's why I start to lighten up stocks. But my short-term binoculars, same as yours, Mitch. I mean, we got a little bit of room to the upside. We set up well for seasonality here. I respect seasonality. I've been a prop trader, I was 22 years prop. So seasonality is a big portion, of what, we trade. And we know November, December is historically a strong couple of months for stocks. With no earnings scheduled, are they going to drop the tape bombs before the new year? Maybe not. Maybe they come to January and start dropping the tape bombs. So I think you've got to respect the bull thesis here. As much as I want to be a bear, I've got to respect the bull thesis. Same thing I was saying 30 handles ago. I'm like, I want to be a bear, but I got to respect the bull thesis. There's still a bull thesis here, and that seasonality sets well. We're through earnings season, and we just got a tick down in inflation. There's room to 420.
Yeah, and I think a big stock today, we'll be watching the price action in NVIDIA, of course, earnings after the bell. I think that's going to shake up a lot of the markets that we'll be talking about tomorrow, but we'll wait and see. Like always, you guys can follow Dennis Dick at Triple D Trader on Twitter. Give him the follow. He loves to give some comments that definitely change up that Twitter game. Everyone goes wild on Dennis's Twitter. So if you haven't had him before, definitely go ahead and add him. He does give some great insight during the markets. Have a good one, Dennis. Take care.
See you guys.
All right, now I'm going to get you over to the boot camp. Yes, we got a boot camp today. We're going to have some live trading action, followed by a couple of chapters, of course, of some great education. So you newer traders, there's a lot of times where you can get education, but what do you got to do? Well, I'll tell you what you got to do. You got to pay up a lot of the times. You got to pay up for the education. Well, right here on Benzinga, usually once a month, we give you an education value back to you guys. And that's the boot camp, really, where you guys can learn from traders that are doing this right now. And of course, full-time traders that know the strategies, that know different areas of the markets. So if you want to learn and get some things for free, of course, well, stick right here. You don't want to go anywhere. You want to go ahead and check out the boot camp that's coming up. We're going to start with some live trading action. So our live traders come hang out with us, and then take a step back, grab some paper, grab a pen, or maybe you're more of the digital type of person, and let's take some notes. Let's see what we can learn today in the markets. And if you have questions, guess what? This is the place where you can ask them. Where else are you getting education? That's 1, free, 2, where you get to ask a question, and 3, also has a little bit of live trading for some great entertainment and learning about process. None other than right here on Benzinga. So come over, team. When's the boot camp? It's right now, K-Chat. You don't got to go anywhere. This will redirect you right over. Let's get right to some live trading action and a little bit of learning. Let's see what our skills can up today. And I'll see you guys over. Let's see who can make it over here. We got 1,242 of you. I want to see who wants to learn, who wants to get better. Come over to the boot camp.